Welcome to the Teachers Lounge podcast, Teach, Lead, Inspire. I'm Ben, your host, and if this is your first time tuning in, welcome. Hi. Don't swipe left. Give it a few minutes. But no, this is a place to kick back on the metaphorical lounge and chat all things education and issues that, pop up, but we don't often get the chance to kick around. And that's just that. Today, we're having a more of a campfire chat style with a special guest who I've roped in from the financial world. And yes, I've swiped right on him. And that is Hamish Clark from Choice Capital. Hi, welcome to the show. How you doing?
Good, mate. Thanks for having me.
And I was just joking in the preamble, which you just missed, about swiping right on you. So I've chosen you out of all the possible advisors out there and swiped right. Anyway, a bit of context for today. So I'm pretty embedded both face-to-face in schools, predominantly in the Territory, and at the moment, but I've also been heavily connected across Australia in the school scene. So I'm getting a pretty good scope of what's happening on a lot of the different places in Australia. Also on socials, you're involved on social media too. It can be a bit of a cesspool of dysfunction out there, can't it?
It can.
But, sorting through the noise, there's vibes in the teacher spaces there too. So one thing I've really noticed and picked up on is that there's a large increase in dialogue around, and just keep the education lens on here, mental health and burnout and taking days off work, which I'd say to recoup from, whatever that stress might be. It's affecting their mental health. Whatever it is, they need to take time off to keep going. And with me, and not that this is about me, but I've worked with you and Choice Capital and my wife as well to reassess this life insurance space, income protection and, all that stuff, setting up the foundations to a financially sound home. And so doing that recently just tweaked my thinking, potentially for others in the education space, about some exclusions that have popped up regards to, coming in with prior mental health things that have popped up and then possibly being excluded from claiming in that space. So that's the puppy. That's the context. Let's pat it.
Sounds good.
Yeah, so nice and easy. We'll just kind of get to know you a bit. As I mentioned in the preamble, it's a bit more of a campfire-style chat, visualising us on camp chairs with a fire, a couple of tinnies. It's just shooting the breeze about insurance and education. So basically, who are you? You're Hamish, but what do you do? Company, role, what drives you?
So, Hamish Clark, I'm a licensed financial advisor, have been for going on 17 years now. I work at Choice Capital. So Choice Capital is my business. I run the financial planning team and division and also the managing partner here. And we do a lot of different things. We do, retirement strategies. We do boutique investing up to, very high net worth people down to everyday mums and dads claiming and settling pension and those sorts of things. And one particular thing pertinent for today's conversation is we do a lot of advice in the insurance space as well, personal insurance. That's life, total and permanent disablement, income protection, and critical illness or trauma across a very broad range of people in different sectors, from tradies up to doctors, lawyers, and everything in between. And relevant for today's conversation, teachers like yourself as well. What I'm really passionate about what we do is that we're on the forefront of being able to build relationships with our clients, with people, everyday people, and being able to tailor solutions to them around how to make their finances current and future the best that they can be for whatever that particular family or individual is trying to do. And that's across everything: tax minimisation, insurance, investing, how to use super, blah, blah, blah. What I really love out of it is I'm a massive people person, and I love partnering with people, helping people, and seeing them live a better life as a result of working with me and my business than what they would do otherwise, without us.
That's great. And not that this is a big sales pitch for you and the business, but there's a, which it could be, but there's a genuine connection to education for you. Is there anyone in your family that's kind of in that education space? Like you work with educators and teachers? What's that personal connection to you in education?
Interesting. Close to home, my mum was a career teacher. She started off her very first job once she graduated at uni. She was teaching up in Bamago in far north Queensland, up in remote Aboriginal communities. So probably quite relevant to you up in the territory and some of your listeners. She stopped being a career teacher once she had kids. My wife's older sister, she's a teacher down at a private school down here in Melbourne, and a couple of other cousins and very close family friends are also very very long term in the education space. And some of my old school teachers as well from my days at school are all clients of mine now. So just through friends and family networks and had quite a bit to do in a professional capacity with teachers in both tertiary and primary and secondary.
Yeah, that's great. And you've also got kids in kind of dabbling in that early school stage. So part of your vision and hope, I suppose, with that it's not a selfish perspective, but teachers that they don't burn out, that they're not stressed and overloaded. And if they are, not you specifically, but there are things in place such as life insurance, income protection, et cetera, trauma in place. Now we'll get into the nitty gritty because I've been harping on in this cesspool, which is the social media, about and having semi arguments that life insurance inside of that your superannuation, that default level. There's so many people saying, "Oh, that's enough. I'm fine. That'll cover me." Another half of people are saying, "No, that's not going to cover your house or X, Y, and Z." So that's a fun little chat, which we can unpack soon. But first of all, like you've been in this for 17 years or so. Personally, you've probably seen lots of stuff, but in a general kind of sense, what's one of the largest concerns in your financial advice space that kind of weighs you down on the day-to-day? Like you see stuff, you hear stuff, and you go into bed on a Wednesday night and something's just happened. What is that stuff that keeps you from sleeping?
I think probably the biggest thing by and large would be there's a perception out there of what my profession does, what financial advice is. Some of that is warranted based on some of the baggage that my profession has over the course of time that gives us a bad rap. But there's couple that also with the fact that I think that with where the internet is now, that there's so much information out there. So a lot of people think that they have all the necessary tools to be able to, can I say, self-medicate and do it themselves. And that there's a massive missed opportunity out there in day-to-day life for the everyday Australian who aren't getting the best structure and best result overall. That doesn't just exist within the insurance conversation because of the perception that they have of reaching out for help for a variety of reasons to see, well, what should I be doing? What are my options? What are things that I can do? And give some lead into the conversation today. What that results in for a lot of everyday Australians is that they are significantly underinsured, so to speak, for their family's financial well-being if anything were to happen.
And I know we do have a sort of script per se, and one of the questions later is one of those what's a story that we can share? Yeah. But first up, we're just going to point and shoot this one, and we're already like 10 minutes in. What's life insurance? We're actually there. What's TPD? What's income protection in like the layman's terms version?
Very, very simply, this is not health insurance. This is what we call personal insurance. So life insurance, if you die, you get a lump sum of money. If you become TPD'd, total and permanently disabled, so you're never able to return to work for the occupation that you've been qualified in, you get a lump sum of money. Trauma or critical illness, you get a lump sum of money if you get diagnosed with a significant, serious illness, trauma, heart attack, stroke, blah, blah, blah. Income protection it will replace the majority of your salary on a month-to-month payment for a defined period of time if you are medically unable to return to work. And the things that would enable you to claim on these would be an accident, an injury, an illness. These things don't cover things like redundancy or the like. So it's medically induced financial coverage.
Yeah, and I'm sure there's possible scenarios and examples we can give in each of those spaces. Probably don't need to do that now. If someone can hit pause and head to ChatGPT and punch in an example, it's right there. There will be some other ones scattered through. But thinking about educators, the numbers say there's about 300,000 educators in Australia, or thereabouts, give or take 10. Straight answer, would you suggest that every single teacher in Australia has these type of insurances for themselves or / their families?
Short answer is yes, and I'm going to extend that beyond teachers to say that everyone, even if you're a couple or a single without kids, but especially if you have kids as well, everyone has some varying need and amount for these types of insurances.
And I mentioned before about some of this dichotomic thinking in schools and people I chat with, and you probably have the same too. Essentially, you're offering this bespoke insurance. So it's basically tailored and nuanced to someone's individuals. And I can just use myself here. So meeting my needs in the financial space, just to clarify that one, I have had, as I said, many people push back on this and say, we're covered, we're all right. And again, do you have a simplified response to that? So someone comes to you and says, don't actually need insurance, we're covered with our super and whatever's in there, it might be 150K or whatever, we're good.
And yes, that is a very common feedback that we get. And I've got 3 very succinct points to explain why that approach is not sufficient.
Mm-hmm.
But I'm going to preface the 3 things I'm about to say by saying I think Australia, in one sense, gets it right by all of us having some level of default cover. It does give those people that don't take proactive steps, like we're about to talk about, it gives something. So, I mean, something is better than nothing. But use your example. If someone has 250 grand of default cover because, my super fund has me covered, so to speak. But if you're a working family, you've got, husband and wife working, you've got, you've got kids at school, let's say you've got $1 million mortgage owing, and then you've got, bills and school fees and any other things sort of to pay as well. 250 grand is not going to do anything really. So if one of the parents was going to pass away, then 250 grand, it would still leave a 750 grand mortgage owing.
Mm.
So the default cover that you get in your super fund, my first point is it's not the right amount of cover for you as an individual based on your circumstances.
Mm.
So that's the first thing you'd need to address. The second thing as well is insurance that you get through your super fund automatically, let's call it automatic insurance, claims statistics of the amount of claims made versus claims paid under auto-accepted insurance are significantly lower than insurance where the individual goes, e.g. through us, to the insurer to get a personalised insurance package. And very simply in the APRA statistics out of FY24, 91% of claims made are paid on average across these 4 different types of insurances when they're taken, through a channel like we're talking about, where you go and do a personal package versus 75% on average if you are a default member of a super fund insurance. Or I'll expand that beyond if you jump on iSelect and do some general insurance and there's ads on TV where saying, I don't even need to do medicals to get the insurance.
Mm.
Those insurances where you're not providing a medical history up front to get a personalised package, they do that at the end when you go to claim with the business mentality. If you're about to claim, what don't we know about you? What levers can we pull to get out of paying you a claim? And that's that's glaringly obvious in those 91% versus 75% claims made to claims paid statistics.
Mm.
The third and final point is you might think in hearing what we've said so far in this conversation that, well, this is all well and good, but I'm going to be getting a lot more insurance and it's going to be better quality insurance. How much does this cost me? Because the auto-accepted insurance through super funds has to cover for the lowest common denominator and things that they don't know, it's actually about 25% more expensive, dollar for dollar of the same cover, than if you go and take a personal tailored package direct to an insurer, e.g. through us. So you actually get your cake and eat it too by having the ability to have the right amount of cover at a better premium rate, structured correctly for your family situation if you do it properly.
Mm. Wow, there's quite a bit to unpack there. One thing that stood out to me there was the success rate, I suppose, of claims, that 95 to 75 circa or whatever it might be. So essentially that is like 100 people. I'm just painting a picture, numbers and numbers, and barking about the obvious. So 95 people out of 100 compared to 75 people out of 100, when they do this more bespoke insurance journey, are more likely to be successful in a claim if it pops up. Like they're quite high numbers, both of them, but still it's quite a differential of when you're dealing with this magnitude of stress. Like someone just freaking died. And we're here squabbling about, oh, I've got back pain, and you're not pulling out they have back pain or whatever, and you're not paying the claim. Like, one, you're in this emotional, fragile state trying to argue about life. Like, does my head in, and I'm not even in that space.
Yeah, you're right.
Well, yeah, I was going to say something else, a story from my journey, but it totally slipped my mind. But that's a great segue still to the next chat point, which is about more specificity in that space. So looking at limitations and exemptions. So you've talked about this, like there is a lower success rate just in that default super and default insurance. So what are there limitations and exemptions to life insurance or TPD or income protection? And again, because I've gone through this process, I have been asked about, you mentioned health history as known histories. So you're coming in saying, yeah, I've got X, Y, and Z. So the question, when we finally get there, is if I declared that I had, say, back issues. So I'm working with Hamish Clark, or you're one of your associates. I've got back issues, or I've had back issues. Say I may have died from a back issue, or there's trauma from back issues. How does that work? I'm basically trying to draw out of you where this line of exemptions are, maybe a differential in how super interprets that and how you guys process that.
Good question. So give you the simple, default benchmark. So you might have $250,000 of death and total and permanent disablement cover and X amount per month of income protection automatically in your super fund.
Mm-hmm.
They've automatically given that to you. They don't know you from a bar of soap. They don't know your medical history, and they don't know your family medical history. And as I said, that premium is 25% higher than if you go and get the medical one.
Mm.
Now, again, you go to claim on that at any point in time. They will look through your medical history at that point in time with the lens of, at the point in time that you got this cover, was there anything in your medical history that, had we have asked, would we have given you the cover at that point in time? And if there are things in there that they don't like, then that does feed through into potentially a less chance of a claim being paid point, because there could be things in there that that aren't covered.
Mm.
So contrast that to if you do it the bespoke, the tailored way, as we're calling it in today's conversation, whereby if you want to get an insurance package of whatever sum insured, you need to do all your medical. You do an interview up front, and you say, "I've got no pre-existing conditions. I've got no history of back issues. I've got no past issues of anxiety or mental health. I'm absolutely what we call clean slate, so to speak. No issues." What can happen though is if you answer yes, I've had some issues around my back pain, or yes, I've had a history with anxiety, or I've had some time off and I've seen a therapist because of some mental health problems. There's a series of questions that will dig further and further into what caused that and what the severity of it was, and did that actually lead to any time off work for you? And essentially what the insurer is looking for is there a pre-existing condition there that, if we are to insure you, are we taking on significantly higher risk than the clean slate approach? Now, if the answer is yes, the insurer can go one of two ways. They can either give you an exclusion where they might say, "Ben, unfortunately, you've got a history of back problems, and we think you are a heightened risk of claiming on any of your insurances through, for a back-related reason. So we will exclude any claims if it results from a back problem." So on and so forth for anything else. The other way that they can do it is they can give you a premium loading, where they'll say they'll give you the cover for everything, but at an increased premium rate, maybe by 25% or 50% or 100% more expensive than the benefit.
Okay.
Just like with any other insurance, like health insurance, are there any pre-existing health conditions that they need to know about that could get excluded? If I can make a grotesque example, when you get car insurance, is there any pre-existing damage to the car that we don't know about? Insurers don't want to take risk on something that there is a much higher chance of happening. And when people have a medical history of certain things, then they're less likely to offer full terms.
And simply with that car analogy as well, have you had a car accident in the past 3 years?
Correct.
It's taking on risk, I suppose, even if it wasn't particularly your fault. It's still there, and someone's got to manage that risk.
Yeah.
Yeah, just prying into that a bit, if you did say, "I'm all G, got nothing wrong with me," and either party, whether it's through the super or through a tailored insurance plan, I suppose the assessors or insurance companies have privacy access is what I'm getting at. Are they just allowed to just nuzzle through our baggage and dirt? Like, is there a law against that? Or is that
good question? So it's a binding contract between the person who is getting the insurance and the insurer. So you need to sign a declaration that you intend to tell the truth. So hypothetically, if you lie on your application that you don't have a history of XYZ medical issue, you don't have a bad back problem, but then they, for whatever other cause that they need to get all your medical records from your doctor, and there comes up with a history of you talking about back problems, getting referrals to specialists, they can decline to give you insurance. Or if it comes out when you actually go to claim on something that was unrelated to what you in rabbit's ears lied about, then they can say, "Hey, you answered no, that you don't have a history of back problems, but throughout your medical records, you've got a litany of consultations around a bad back that pre-exists your application." They can tear up your contract and not pay you the claim based on on bad faith type of thing. So you are required contractually and legally to tell the whole truth when you do your application, and varying degrees of medical records from your doctor or specialist will be requested when the insurer is assessing your application before they give you the cover.
Yeah. We're kind of getting off topic but a little bit, but I'm trying to paint the picture for our listeners, and I suppose even for my own clarity. As we said at the very start, I've just seen a very high rise in rhetoric about mental health and burnout, and I'm loosely throwing out these words that are very, very serious conditions, but I feel that they're loosely being thrown around for people that possibly are just having a tough time at work. I'm not belittling the effects of mental health and burnout and high pressure. But I just kind of get the vibe that in the education space, burnout, mental health, stress leave, it's all popping up very quickly, very easily, not diagnosed, more self-diagnosis. I feel this.
Yeah.
And you can kind of pinch where I'm angling this. And this is the part of the conversation that I really wanted to harp in on. So visiting a GP, if you are kind of struggling, now I'm talking to our listeners here. So you might have visited a GP, really hard time at work, student behavior, it could be leadership issues, whatever's in that box, you're struggling. So you get a referral to, say, a psychologist. So you've gone to the GP, yep, you're struggling, go to the psychologist or a counsellor, or they've accessed sick leave on the guise of, quote, quote, mental health. Okay, so that's the picture, or burnout. Very serious things in and of themselves, and I'm kind of flippantly using them on purpose here. Hopefully no one's getting offended. Now, is there a flow-on effect? I'm sorry if people are offended. I don't really care anyway. You do you. Flow-on effect for a teacher who has not got their life insurance sorted.
Yeah.
As in they haven't got it ready and they're thinking about it. And this stuff needs to be declared. And so one of my questions when I was meeting with you guys was, have you struggled with mental health or gone to see a GP about mental health? I think it was around that space.
Yeah.
That could be quite a challenging question for someone, which they obviously need to answer. So I'm going to punch 3 questions at a time so you can manage that. Smart guy. So there's that one.
Yep.
And should teachers, and this is where a lot of people get their noses out of joint, should teachers strategically or cautiously manage that quote, quote, mental health space in case they need to set up their insurances? Because I'm feeling, as a like for back or mental health, that there might be some implications. So I'm going to let you process that.
Yeah.
Let even our listeners process that because it kind of came out jumbled. But you kind of get the vibe. Do we need to strategically use mental health and burnout and be careful when we go to the GP, basically?
I think there's an element of yes and there's an element of no.
Mm-hmm.
Okay? The first step would be, if I can use my analogy, when you buy a car, before you intend to drive and before you potentially have a crash, you get your insurance. So early on in your working life or as quick or at whatever juncture point you're at, that is the point in time, if you haven't done it already, to get your insurances sorted, whether or not you've got pre-existing conditions or not, because there's so many different medical things or there's so many different medical conditions that could result in a claim. So if there is a history of a bad back, if there is a history of mental health, then there's and you hypothetically do get an exclusion and you don't get it covered, there's many other things that will be covered. So get that done. But the other point that I'd say is don't not get treatment for something that you need treatment for just because you don't have insurance, right? If you need treatment and you need insurance, go and get both at the same point in time. Just because you maybe in the past have gone to seek treatment for it doesn't automatically mean that you're going to get an exclusion or a negative outcome on your insurance.
Yep.
The insurer will be very specific in their line of questioning and what info that they want as to what your pre-existing history with that particular condition was, as to whether they think that is likely to occur again in the future. Professionally, I've seen people who have had experience going to the GP with some anxiety, not getting an exclusion, just as I've seen people that have had the history of treatment and anxiety get exclusions. It's very, very tailored to what that individual's circumstance was. So in summary, again, just like car insurance, get it sorted, insurance as quickly as possible. Now is the right time to do it.
Yep.
Because once you've got it, you at least know that whatever happens in the future, you've got coverage for it. The second point is, don't ever not get treatment for something that you need treatment for just because you've got an issue of potentially it's going to have an adverse reaction on your insurance. Because ultimately the insurance is, if you've got it, it's there to support you if you can't, if plan A, if you can't do it yourself. so to speak.
So yeah, part of the narrative that I hear in these teacher circles is that we, as in teachers, should be able to take mental health or burnout days without feeling guilty about it or affecting our future. And from what you just said in that yes/no commentary, it's almost grey. Like, yeah, absolutely. If you need to, like, if you're in the depths of despair and just cannot get into work, take the day, go see someone, help yourself. And on the other side, if there is an other side, what advice would you give teachers from that insurance-based lens? And caveat as well, anything you hear on the show is not official advice. Go see a proper financial advisor that you pay for. This is just an ad hoc campfire chat. We're on our third batch of tinnies. So what should people do?
Well, I think there's, again, not to be the fence sitter, call me Malcolm Turnbull if you want, but there's an element of yes and there's an element of no in there. I mean, if I could talk from the insurer's angle first, because mental health is very, very subjective, it's not quantifiable. Like there's a statistical rate of cancer. There's like blah, 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 blah. Mental health is very, very unquantifiable and statistically hard to price risk on, that insurers typically take a more conservative approach when they hear that there's histories of it. Now, again, as I preface with my last point, just because you have a history with it doesn't mean you're never, ever going to get cover on it. Just put that out there. So I'd answer your question by saying that absolutely, if you just can't get your mojo back and you need some time off to gather yourself and recharge your emotional or physical batteries to get back in the groove of teaching or whatever it is that you do, go and take it. I mean, it's like it's just like with any other medical issue. If you need time to go and heal and get yourself right before going back to work, go and do it, type of thing. So again, if we're talking about this with an insurance lens, whether you have insurance or not, don't not go and get the treatment that you need, whether it be just self-prescribed time out to recharge or going to seek professional help. Go and do what you need to get yourself right. I'd say it again, that whether or not you have a history of mental health or not, time is of the essence to get your tailored insurance solution sorted now, because whether it's mental health or whether it's, God forbid, you get out of the car and you get sideswiped by a bus or you fall over tomorrow and you have a heart attack, there are a myriad of issues and statistical causes of what could result in you needing to make a claim and guarantee your family's security from. Go and get the treatment you need for anything, whatever it is, but also go and get your insurance sorted as quickly as possible.
All right, here's a new little segment for a quick sponsor grab. I'm actively looking for a show partner to come on board the wild ride of the Teachers Lounge, maybe A-Mart. That would be funny. But meanwhile, please punch a 5-star on Spotify and jump into the Facebook group Teachers Lounge, Teach, Lead, Inspire. And, like all the posts, throw some comments, questions in, that'd be great. But this is a space for a sponsor to jump in and really support and sponsor and drive the show forward.
This chat goes beyond mental health. As you said, there's a myriad of things, even on the way to school. Like there's buses, there's trains, accidents happen. A rocket could fall from the sky and just demolish your car and you inside of it. Very unlikely, but stuff happens. So essentially out of all of this, I think the number one thing that you would communicate is get your insurance sorted out.
Yeah.
Don't settle for what's in your super or whatever might not be in there, because I would argue to say and hedge my bets that half of our listeners wouldn't even know what they are covered for. So number one, go get your insurance. Is that right?
Correct. Agreed.
Correct. Second point is that, and this is the kickback from a lot of people that I chat with, is I shouldn't have to worry, and they use the word worry and stress, ironically, about taking care of my mental state. And so essentially you're saying that, and I would say this as well, if you need help, go freaking get it. You agree?
Great.
Good, good. This has been synthesization of our, half an hour, 45-minute chat. And number 3 is, would you say that people should still, even though they need to take care of themselves in that mental state, doctor, psychologist, whatever you need to do, prescriptions, just strategically keep one finger on the insurance space? Like, do people need to do that, or just flippantly, I need a doctor, I need to go, done? I think that's the bit I'm wrestling with.
It depends on what. Maybe dig into a bit more about what you mean by keep your finger on the insurance space, because there's an element of what I think the individual needs to do, but then there's a massive element of what we on our side as the advisors or the brokers of that tailored insurance solution should be doing to better service our clients. So do you just want to specify exactly what you're trying to get at?
Yeah, sure. And I think step number 1 would cancel out for sure step number 3. So if someone has insurance already and then they've been either bullied at work, or children's student behaviour is just so rife that they just sent them into a tiz, that's pretty clear. They can lodge the claim and whatever happens. The flip side of that is they don't have the insurance set up, and they've actually got quite an extenuating circumstance where they physically cannot step back into a school or their classroom because student behaviour or like the things that they're saying is just so brutal that going back in, it will send them over the edge. And they need to go to the doctors, they need to get some prescriptions, and they need to spend half a year with a psychologist to deal with this poo. I have a explicit free zone on this space. So they don't have insurance. That's happened. Do they get insurance and then go to the doctors? Like, is there a sequence here? Because I'm imagining as soon as meds are involved and psychiatrists, that's that risk factor that insurances don't like, unfortunately.
I think there's an element of yes in there, but also another element of no. I mean, again, I would specify, whether you're clean slate or whether you're at the verge of dealing with some potential things, or whether you've had a history of certain things, there is no time like the present to just pick up the phone and go through the process to see how much insurance you have, how much insurance you would ideally need, and explore what type of insurance you can get, so you can at least make a line ball call of saying, I've at least got the right numbers and I'm covered for this, that, and the next, and at least be eyes open of what you're not covered for. So you can take some proactive steps of, if I'm not covered for a long-term back issue, if I'm not covered for mental health, how do we manage that issue sort of going forward? I think if you are on the verge of taking time off work, let's talk about a mental health example here. If you're on the verge of taking a time off work because of anxiety and stress, and you need burnout, and you need some time by yourself, and you're about to make that doctor's appointment, you go, should I seek the treatment first, or should I go and get my insurance sorted at the same point in time? There is a catch-all question line, which you'll know about personally, Ben, that when you're going through the insurance questionnaire, that whether or not you've already sought treatment for it, whether you have had experience of these certain feelings or thoughts or the like, that will lead down the road of those questions.
Yep.
So again, I would say go and do both at the same point in time. Go and book in for your treatment. Go and organise your insurances at the same point in time. And just because you are feeling those feelings doesn't automatically guarantee that you're going to get a negative outcome on your insurance, because again, it's all about the lens of what caused it, what's the likelihood it's going to happen in the future, and the most important thing is it going to result in long-term time off work that we as the insurer would ultimately be paying for.
Yeah.
Always just play both at the same point in time.
No, that's fantastic, and it's one of those conversations that I think a lot of people just don't get to kick around a lot. So even just us kind of shooting the breeze and dialoguing together hopefully might be inspirational at least, or a kick up the pants to actually do something and take action. Another a quick one, which may not be quick, but is just the concept of something's happened. What am I entitled to do, or when should insurance or income protection kick in? Again, just scoping out the context as a school specifically. It doesn't need to be mental health, but something's happened. A kid's, I don't know, thrown a chair at you and it's done your neck out or something, or they've, I don't know, you've slipped, tripped and fell. Like there's work cover. There's a lot of different avenues. I don't know if you can shed light on, and this is probably not the life insurance component, but more so income protection and trauma. When is it appropriate, or is it an example school-based that someone should possibly tap into this, income protection, which covers you for many, many years? It can. But what's an example?
The two key things to preface my answer about more as an education piece for the listeners is income protection. It doesn't have an excess payment like your house and contents insurance or your car insurance. It has a waiting period. So most typical default insurance policies through super funds will have a 30 to 60 to 90 day waiting period. So you need to be off work, not earning for 30, 60 or 90 days before you can successfully start receiving your claim proceeds. That's 1, 2 to 3 months of off work. You've had the chair thrown at you, you've taken mental health leave or whatever, and you're not working, you're not earning before the insurance will kick in. It will then have a benefit period, which will be how long it will pay you for. Most default covers will be between 2 and 5 years. Very, very rarely will it be a default payable to age 65, which gives you almost, in inverted commas, a guaranteed replacement salary for the rest of your working life. So typically on average it's 2 to 5 years. Then the third thing is because they don't know you from a bar of soap, you might be a teacher on 80 grand, you might be a teacher on 200 grand or whatever your position is in your salary. It's the insurance monthly benefit that they will pay you. It can only ever be a maximum of 70% what you're currently earning. It will not always be directly tied to what your current salary is. It will be a default assumption by the insurer. It could be as low as $2,000 a month. So the risk here is that, you might not know what cover you've got. You might get, you've had the chair thrown at you. You're in the middle of therapy and working yourself out. And then you pick up your statement and you go, what have I got? I've got to wait 90 days for it. And even after 90 days, I'm only going to get $2,000 a month. And I was used to earning $7,000 a month after tax. My mortgage payment is $4,500 a month by itself. I can't afford to not be at work. And then you're compounding your issues by not getting the treatment, you're forcing yourself back to work. And sorry, I'm rambling and I'm probably not directly answering your question, but
yeah, no, it's really good just to again shoot it around, kind of making up scenarios. But as you know, in the insurance space, anything can happen in life. Like you could have a freaking bird fly into your face and blind you. Like bloody anything could happen. So,
correct.
Yeah, and I think that's the whole point. Everyone knows what insurance is. We get it crammed down our throat with iSelect and Compare the Market, but it's these nuanced and tailored things that can just be a surprise to us. And the one thing I wanted to point out was as well, again, just the seriousness of particularly this insurance space. So we're all very quick to get pet insurance for our dog that we love, or insure our car or our house. And there's just so many people that neglect their person, their family. Some of us have families, some don't. But if you think of a house and the foundations of a house, and our house metaphorically being, your family, and something happens to you, and I could almost be trying to do your job here and sell insurance, but it's screwed. And this kind of rolls into the last kind of question snippet I have. So I always bring it back to me and Lisa and say, like, if something happened to Lisa, let's just say Lisa died, very morbid thought, but, we kind of got to kick it around. Anything could happen. Horrific car accident on the way home. Let's just go with that. I'm left with 2 kids. I'm left with some private school fees. I'm left with a mortgage left with probably a screwed up emotional state as well. And so option one, don't have insurance. I need to go back to work the next day or pretty soon thereafter. That's not going to be great. Option two is the insurance pathway. I've got a bit of breathing space, and we've talked about it. So for me, and your family, Hammer, might be different, but for me, I'd probably need about 5 years to get over my wife dying, like practically.
Right.
And the kids, it's not me. I could probably go to work the next month, but I've got kids I've got to wrestle with, like, and their emotional. Who knows what the hell they're going to be thinking? And our listeners might be going through this as we speak, which would be awful. But that's a real scenario that we and my wife and I talk about, not daily. That's just weird, but you've got to kick it around. And so my last question is it's not a scare tactic, but is there, and it doesn't need to be education based, but is there a story that stands out to you that from a real client, or maybe someone that wasn't a client, who has either had not had life insurance and kind of how that unfolded for their family, or B, maybe they had life insurance and TPD, but perhaps were excluded on something. Yeah, what could, not scare tactic, but what can you kind of share as a scenario?
I've got two key sort of case studies to run through with you, both tailored to exactly what your two scenarios were. So the first one was where someone had a major event that they would have otherwise benefited from having this tailored bespoke insurance structure with, but only had the default cover.
Mm-hmm.
He's a 34-year-old, had 2 kids under 6. One of them had just started prep. His wife wasn't working because she was, looking after the kids, etc. He was he just had a career change and was just trying to make it in real estate at this point. We met with him. He ended up not proceeding with any of our recommendations, just thought he knew better and etc. He suddenly died of a heart attack out of nowhere and left his wife with a 950 grand mortgage.
Ooh.
And a 34 not working with 2 kids under 6, etc. And he had about $220,000 of default life cover in his super fund. So the conversation with his wife was, unfortunately, he didn't proceed with everything. Obviously, nor did she. So she had 220 grand to come out, which meant she had to sell the house in her grieving period. And then she had to go and rent. And then that money would exhaust pretty quickly. The life insurance amount would exhaust pretty quickly whilst she paid living expenses and everything and rent, and got herself ready to go back to work. And then she was a single mum renting with 2 kids in tow, which is a very, very different scenario from, the scenario that we typically pitch to most clients is have enough insurance that whether it's you pass away or you're disabled and you can never work again or et cetera, that you've got enough to pay your mortgage. Or if you're renting, then at least buy yourself some, it doesn't have to be a chateau or mansion, just buy yourself some housing security, and then have enough on top of that to invest, and the annual interest or return or profit that money makes would be enough to pay you a sustainable annual income. In the wife's case, 60 grand a year to put food on the table, pay general bills, and some semblance of school expenses for the kids. Not talking a major private school education.
It's modest.
It's just a modest sort of thing. And that sort of narrative or tailored solution can be molded to most people. But if you take those sort of 2 extremes, they decline something, and unfortunately for the wife, she's paying the price for that for forever and a day more. Whereas, with the appropriate structure, they would have been completely fine, and they're left to grieve in their own terms without the financial pressure.
Yeah. And just, sorry, kind of tapping into that before your next bit. It's, I suppose, it's simple but not simple. But like when you do come across those scenarios, like, you are a person. You're not just this, super financial advisor robot just ticking numbers and making getting clients. Like, how does that make you feel when, and I know this is kind of outside the realm of questions, but how does that make you feel as a person when someone's blatantly just come up to your face and said, yeah, no, I think we're pretty good with what we got. We don't like, thanks for the advice, but no thanks. Like, where do you go with that?
No, it's pretty hard. I mean, as you said, we're all people, and as I said right from the start, one of the things that our business is about, and me personally as one of the major business owners, is that we do this because we want to help people and we want to see people in a better position. Ultimately, we want to work with people on their plan A, that the insurance is never there. It's just a necessary cost so that if anything ever happens, that it's there.
Mm.
But when we look at scenarios like that, where we've sort of laid out the path and the options A and B, and they haven't taken option A, and in this family's case, they're left really, really financially insecure.
Mm.
It's a bit gut wrenching, because you kind of know that what it could have been and how happy and secure that they could have been, and they're not. And it is a small price to pay to make sure that they are okay. Your loved ones are okay, and or yourself if you're still around as well.
Mm.
So it's gut wrenching, and
yeah,
we pair that as well. And as I said, I've been doing this for 17 years. There's many case studies where we've gone through that case with people where they have claimed that they've got the cover, and we see the results of them being okay. And if I could share a bit of a personal note, one of my long-term best friends' parents, we did it with them, and it was one of the absolute highlights of my career, where we sat in the room and we pulled a check out of my pocket. And I said, you don't have to work again. You can pay off your house, and you can sail off into the sunset. You've got security of income, and you can nurse your wounds in inverted commas without the financial pressure for the rest of your life. And that was a life-changing moment in my career, being so close to home.
Yeah, what a beautiful experience that is, particularly with a best mate and their parents, and just really dealing with their life and their livelihood. And yeah, pulling out that check would have been something else to go, hey guys, well, there's still stress, but that financial burden is just lifted because you guys have been diligent. X, Y, and Z. Here we go. I love that. I love that personal touch, and it is that financial advisory or space, but we often miss that personal financial advice, and it's really that human element that's really important to focus on in your line of work. So yeah, I did interrupt. Did you have a second scenario?
Yeah. So the other scenario is where someone who already had the existing insurance package but got an exclusion.
Yep.
Came in. It might actually be quite relevant for the listeners in everything we've been talking about. It's a couple, with teenage kids in their mid-40s. She was a lawyer. Brother died suddenly, and she decided to take some extended care. There's a few sensitive points in this around how people are going to take what I'm going to say, but I'm just going to say it how it is, because insurance isn't a touchy-feely subject. But she saw the opportunity to go and take extended leave from her work, because she worked at a tertiary institution. They had very, very flexible policies around, if you have any issues, you can go and take extended time off. We'll pay you for an extended period if you've got mental health issues. She went and sought the maximum supported psychologist treatment through private health insurance and bulk billing and everything. And she really she took the opportunity to take some time off, deal with there were feelings there, but in a cynical person could say she sort of turned the volume up, to take the extra time off and lean into these services. And she as a result, going through all her medical histories, has a litany of very, very specific mental health trigger points that an insurer would look at, even, what has it been? It's 8 years after the fact now. Insurers now going through her medical history, if we were to go and renew her tailored package. She already had the tailored package before this, but now premium costs of how insurers work is she's paying 40% over market rate, but she can't move that cover to get a better premium result because of this mental health sort of thing she went through. So she's got a choice to make now: is does she keep paying 40% extra for the rest of her life because she turned on the noise, so to speak, of her claim, and she openly admitted that to us. Does she pay 40% extra to keep the cover if something real was going to happen in the future, or does she pay 40% less and get an exclusion for the rest of her life? So that's a really important case study into the window of how the insurers look at this, because it is so unquantifiable. That they look at her history in this, and they'd say, you took so much time off, and you had such an amount of treatment that you'll have a hard time proving to us that this couldn't happen again. In the insurer's mind, wasn't necessarily a very close to home trigger, so to speak.
Yeah, and that's a really, really great point to ride on a little bit. And I think you just put into words kind of what I was insinuating at the start, is that, and it would be a small portion of people, I imagine, that are essentially trying to exacerbate what might be going on. So trying to exacerbate a scenario just to kind of either get work cover, like basically just to get off work, or get leave approved. You got to prove X, Y, and Z to do this, and we'll give you some time off that you need. And essentially exacerbating your mental health state, or exacerbating a burnout scenario when it might not necessarily be. And again, people can get offended. It's like, oh my gosh, get offended if you need to, but we're talking real stuff. Exacerbating it won't get you anywhere. It will trigger off. It won't work in your favor in the long run. So yes, get the help you need, but at the same time, don't exacerbate things, because it could come back to bite you, essentially, when the hood gets popped, so to speak.
Yeah. Interesting.
We are gonna kind of run out of time on our campfire chat. Is there anything that we any final remarks in this insurance space?
The only thing we've touched on a lot here, and I think the general takeaways, if we can summarise for everyone at the end, at least from my perspective, is if you haven't already got a tailored bespoke solution, reach out, whether it be to us or someone that in your networks, wherever you are in Australia. Go and get it sorted now. The second point to back that up is it doesn't cost you an arm and a leg to go and do this. As we said, dollar for dollar, the same dollar of insurance, doing it the bespoke, tailored way, which is a better quality of cover that will cover that statistically 91% of claims made are paid versus 75% doing it the default way. The premium cost is cheaper.
Mm-hmm.
The third point that I'd make is insurance in just embarking and working with a business like ours or a financial advisor. It's very similar to work just in the insurance space. Let me just clarify that. Is very like dealing with a mortgage broker. It doesn't cost you anything to work with the financial advisor to go and do this, unless there's predicating circumstances, which I won't go into to complicate the matter, because just like going to a mortgage broker, when you don't get a higher interest rate because you go to the mortgage broker, you don't get the higher premiums because you work with us. It doesn't cost you anything out of pocket to get this service from us, because ultimately we are paid by commission by getting the right structure for you. We've covered off on, I think, everything pertinent to understanding the landscape and the risks and opportunities that there are. But if there is any inkling on any of the listeners that this all sounds great, but what's it going to cost me to go and get that? It doesn't cost you anything, and by and large, most of these premiums are paid for by your super fund. So lean into the conversation, pick up the phone, reach out, start the conversation, get it sorted, because you don't know what's coming down the tunnel. And fingers crossed, if anything ever happens to you or your family, that you've got the cover already sorted. That financial security is already there, letting you deal with everything else that life throws at you.
Yeah, no, that's fantastic. And that was one question I had, or not a question, but more of an observation. And the default position in people's super, they are, or you're still paying a fee for that, aren't you? So you got your default super, you got your insurance, and maybe some very small income protection, and there's fees already going out for that.
Yes, yeah. Default insurance in your super fund, you're already paying for.
Yeah, they're still paying fees. And so flicking it over to, again, we're just using the word just bespoke and tailored, it still comes out of your super, those fees, except what you are already paying, and everyone's paying it because that's default, might be a little bit more. But again, for the success rate and for what it is, the dollar for dollar, like for like, it's again, a no-brainer. So still paying for it regardless is my point.
Correct.
Well, Hamish Clark, thank you very much for coming on. I've just got some, as I keep saying, you are a person, and I've got some point and shoot questions for you.
Go for it.
Which may come back to bite you. Are you Apple or Samsung? Samsung all the way. What about Spotify or other music consumption avenues?
YouTube Music.
What's that?
It's YouTube's equivalent of Spotify.
Never heard of it. Moving on. Are you coffee or tea? Coffee or tea?
Short black every day of the week.
Short black. I'll raise you a long macchiato. What about, because we're in Darwin here, I'm in a flannel tee and you're in a suit, probably with a pair of thermals underneath in Melbourne. Are you a pro-hot climate or pro-cold climate kind of guy?
Being born and bred in Melbourne, I like to have my cake, my bread buttered on both sides. I enjoy the cool winter, but I also enjoy having a warm summer. So I couldn't survive in all heat and I couldn't survive in all cold. So Melbourne will keep me.
We'll see you up here in the dry season, perhaps. Which is my next question. Are you going to make a Darwin visit and see our family, or just have a holiday?
It's definitely been on the cards. I'd love to come up and see Kakadu, and there's not really any business ventures that takes us up there. I'm probably more Adelaide, Perth, Sydney, and Brisbane, and Hobart business visits. But never say never, and if there's an opportunity to come up for any reason, I'd be more than happy to come up.
Run a finance conference. What's that finance conference in the States? FireCon or something?
There's a whole range. Yeah,
I don't know. Doesn't matter. There's so many. Anyway, thanks again for jumping on the Teachers Lounge, Teach, Lead, Inspire. And hopefully it's been just that not educational practice, but whoever's listening, wherever you're listening, that the number one thing we spoke about today was just bloody get your insurance sorted.
Great. Very much so. Thanks for having me, Ben. And to all the listeners, thank you.
Yeah, and we'll definitely have some follow-up questions, I imagine. Another whole list of podcast series to do in the insurance space, which you can do a mini-series on, perhaps.
Happy to do so.
Amazing. Thanks again. We'll catch you later.
Thanks for listening to this episode release of the Teachers Lounge podcast. We really do hope you've enjoyed the dialogue. The information discussed today was just that, information only. It's not specific advice. If you act on something you've heard today, it's important to make sure that you get professional advice about your unique situation before you proceed, whether that advice be legal, financial, accounting, medical, or otherwise. Please reach out to Ben if you have any questions or if there is anything he can do to support your teaching or leadership journey, whether it's another topic you'd like discussed or one-to-one support. If you do know someone that would benefit from listening to this episode, please remember to tell them about it, share the episode with them, or connect us on socials. We trust you're encouraged in your role, your leadership aspirations, and your ability to serve and inspire.